Hello and welcome back to another video on the channel. So in today's video, we're going to be talking about inversion levels. It's a very simple concept that can allow you to understand when you have a change of delivery price and give you an entry in the opposite direction. So right here in this diagram, we have a bearish sell side fair value gap given to us. We have a wick to the left and a wick to the right and a volume imbalance in between them two wicks within this candle here. This is known as a simple fair value gap. But what about if this gets violated? What happens then? How can we use this previous fair value gap to change market direction and perhaps take a trade in the opposite direction? So the inversion level can be used in a way that if we get a body closure through the fair value gap, meaning this fair value gap is no longer valid and has been violated, we can then see price push through and then react and use this as an inversion fair value gap for support for price. And then what we can do is we can look for a long position to change market delivery in the opposite direction of what we were trading in. So this is just going to act as a support or resistance, whatever way you are watching it, once it violates price. So we've been trading up on the euro dollar. So what we can expect from this, we've had the close through the fair value gap. We've then closed in market price on this daily body closure here, showing us we've had a change in delivery. We can then use our previous fair value gap, which is now used as support when we had this wick into this zone here. What did price do? Price came in to the discount of this body candle, and then we distributed to the upside. And that is simply down to the fact we violated this, and then we're using it as a support because this is where more orders will be taking place within the market. So I'm going to show you on the 5 minute also. Jumping onto the 5 minute now, I'd like this price action here. So what we saw price do within this time period, we saw Asian session here. We then saw Judah swing. So we took Asian lows, sell side liquidity. We've then pushed up and we have a fair value gap that a lot of you may have been looking to take an entry from. I want to mark it on my chart and then just show you how we can use this as an inversion level all the way across. So let's say you were looking to take a trade from here. Price violates our fair value gap, pushes through. What does price then do? Price then comes and uses that again as support to distribute price in the opposite direction. Hopefully none of you were trying to sell this after we had the body closure above this low. But if you were selling it, it's fine. Just ensure that you can catch the move after on our inversion level. Okay, so we've got another example of our inversion level on the 5 minute chart. We have this push up in price. Price then violates through and we get the closure, body closure once again. So we can then mark on this fair value gap as our inversion level. What do we see price do? We see price retrace into our inversion level, use as support, and then price comes back down into some lows down here. But do you see how we can use these inversion levels to get our new entry once we see the violation and change in delivery on one side of the market? So that's just a simple video on inversion levels. If you have any questions around inversion levels, drop a message in the Discord server and I'll get back to you. Other than that, I'll catch you all in the next video.